Good. Okay, so I've got the recording on. So as you know, this will be available for you to go and peruse afterwards if you miss anything. Awesome. Hi, Denisha. Hi, Ulrich. And remember also just ask questions, chat away in the chat box. I'll go back to anything that if you think of a question while I'm talking, just type it in the chat box and then I can go back to it. And then also you can open your microphone and talk as well. Okay, so what I wanted to do this evening was to go over the answers to your assignment 1, because I know it's always difficult when you've done an assignment and you wonder, like, did I get it right? What happened? So you'll be able to see while it's still fresh in your mind what the answer should have been, and you'll be able to ask questions if there was anything that you got stuck with, and you can then go and compare it to your assignment once it's marked. So your assignments aren't marked yet. It takes quite a while to do them because your group is quite a big group. It's nearly 50 students. I think it's 40 some odd students. So they won't be, the marks won't be released, not at least until probably towards the end of next week. And when I finish marking, the marks go through to the National Results Center. They've got to check them and verify them, and then they release the marks. So we have to wait for them to check everything. So just be patient with the marks. They will be done as soon as they can be, and you guys will get them. And then also when I mark your paper, I mark your papers online. So on your paper, I will do comments and references and circle stuff and say what you got right and what you got wrong. So please open your marked paper when you get it back and go and read through the feedback that I give you, because that will be really important for you to also understand where you went wrong. And then you could also ask me any questions, anything that you don't understand. Okay, so I'm going to go and share my screen now so I can put the question paper and what have you up on the screen. What do I want to do now? Not share files. Sorry, let me go back here. Share screen and audio. Okay, so in a moment you should be able to see there's our kaleidoscope. Okay, so let's go and open the paper and remind ourselves where we were. Okay, so this was question 1. So question 1 was only for 5 marks, which was just to give you some practice in identifying these accounts, and you had to identify which category in our accounting equation those items fell under. So let's see if you got those right. So capital and drawings are always the only accounts that will ever be under proprietary accounts. So in this example, we only had capital. Non-current assets will be those assets that the business will utilize for a period longer than 12 months. So that is things like computers, equipment, machinery, etc. So equipment is a non-current asset. Our current assets are those assets that we use in our business in what we call our working capital on a day-to-day basis in our business. So that will be things like accounts receivable, bank, inventory. So in this case, bank is a current asset. Non-current liabilities will be all of those liabilities that we will only have to settle further than 12 months in the future. So when they use the words long-term loan, you know that that belongs under non-current. And then just with current assets, current liabilities are those liabilities that we basically use on a day-to-day basis in our business. So that will be things like short-term loans and accounts payable. So here we've got creditors control, which is our current liability. And then income and expenses, hopefully those are easy enough to identify. Income will be anything that is revenue for the business, so sales and rent received. So always remember to look for clues. They use the word received. If that had have been rent paid, then what would it have been? If that was rent paid and not rent received, which category would that have been then? Exactly. It would have been an expense. And then expenses, we've got staff refreshments, consumable stores. This is the only one that I think is a little bit confusing, but they do discuss it in your textbook, because remember, consumables, because it's a consumable, we have to expense it straight away, and only at the end of the year do we sometimes then convert some of that expense back into an inventory item. But when we purchase consumables, we expense that at the time of purchase. And then water and electricity is also a day-to-day expense. It's a running expense of our business. Okay, so hopefully you guys got all of those right. And remember, I think it's on page 52 in your textbooks, you've got that table, which is a real good cheat sheet for a question like this. And you should use that table regularly to go back and keep testing yourself to make sure that you can always identify correctly, because there's a lot of mistakes you can make in doing your journals and doing general journal entries if you can't identify correctly what category an account belongs in. So that's a very important exercise. So it was only 5 marks, but it's super good practice. So then our next question for 20 marks was our friend with his aunt. He wants to open a business and he's asked us for some assistance. So he's got a wealthy aunt and he wants to ask her for money to start the business. So there's 2 ways. If his aunt has got money, there's 2 ways that she can, don't want to use the word give, but provide the cash to him. She can either be an investor in the business, which means she is then a part owner. She owns part of the business. In other words, she owns shares in the business. Or she can just lend him the money, and then she is a lender. So she could either be an investor or she could be a lender. Those are 2 different ways in which she could provide the money to him. So in your own words, you needed to explain how he, and remember, they didn't say explain what an investor is and what a lender is. They said explain how his aunt will use financial reporting of the business. In other words, as an investor in the financial reporting or reports of the business, what will she be looking for if she's an investor? And if she is a lender, what will she be looking for? Okay, so make sure you read that question carefully and answered it in the correct way. So if she's an investor, then she is now part owner of the business. So that means her interest is more broad, if you want to put it that way, than if she was just a lender to the business. She's interested in the risks inherent in the business, excuse me, in the returns that the business is going to provide. In other words, what is her return on her investment going to be? And what would she use information for? She would then use the information to determine whether she buys into the business, in other words, whether she invests money into the business, whether she holds the investment, in other words, keeps her shares, or whether at some point she later on decides to sell her shares. Okay, because remember now she's a shareholder. And then she'd also want to know about whether the business can afford to pay her a dividend or not, because she owns ordinary shares, she's entitled to dividends. Then if she was a lender and made a loan, then what she's interested in is the interest due to her going to be paid to her on time? And also when the loan is due to be paid back, will the capital of the loan be paid due to her when it's time. So that's what she'll be looking at, the financial information, to find out, to make sure that the business is making enough money to pay her interest and pay her loan back. So remember, in your own words, as long as you've conveyed that meaning, and we can see that you understand the difference between what an investor is interested in as opposed to a lender, then you would get your 6 marks. So just as interest's sake, to see how the marks are allocated, there's 3 marks to each of the 2 discussions. 2 marks for discussing their interest as either a lender or an investor, and then 1 mark for making the answer applicable to the actual case study. Because remember, they've given you a scenario. You've got a friend and she's got a wealthy aunt, and they've said, in your own words, explain to your friend how his aunt will use that. So you must give your answer in your own words as if you were talking to your friend, and refer to this actual case study. That is important that you learn to do that in accounting, because you are acting as an advisor to, in this case, your friend. So we don't want you to just go to the textbook, copy paste, and it's just definitions straight out the textbook. We want you to apply it to the questions, and that's so that we can see that you actually understand the true meaning of these different concepts. And always, if you can explain it in your own words relating to an actual case study, that's the easiest way to check yourself as well whether you understand the actual concept. Then our 2.2, also for 6 marks, your friend is not sure which business form to adopt for his new business. So depending on which business form we choose, that will differentiate his exposure to risk. In other words, his own assets that belong to him. In some business forms, his own assets will be at risk, and in other business forms, his own assets will be safeguarded. And also, depending on which business form you choose, some business forms, it's easier to apply for capital, in other words, loans from banks, than others. So briefly explain to your friend how each of the following 5 factors will impact his choice of business form. So again, look at what they've asked you. They wanted to know how will it impact his choice. Not what is a legal personality, but how does a legal personality influence which choice of business form he decides to go for. So the 5 factors are legal personality, starting procedures, obtaining capital, the ownership and management of the business, and the distribution of profits. So for legal personality, and you can see here how they've worded the answer as well. They've said, here's a scenario, it's your friend, explain how your friend would, etc., be influenced. So your answer should say, if my friend trades, okay, so remember here we've got a choices as a sole trader, he will be the legal entity. In other words, the business is not a separate legal entity from himself, so therefore he will be responsible for the debts of the business. Because remember they said how it will determine his exposure to risk. So his exposure to risk as a sole trader is that he will carry all of the risks. If he trades as a company, then the business has got a separate legal personality once it is registered, and etc. And so that is what you should, from a legal personality, you should have said, if he's a sole trader, these are his risks. Whereas if he incorporates a business, it's a separate legal personality, and so his risks are different. And then in terms of starting procedures, how would that influence your choice? So again, depending on the ownership form, some starting procedures would be very lengthy. So in other words, again, if you are going for a registered company, those starting procedures are longer because you've got to do all of these registration procedures and open bank accounts in the name of the company, etc. Whereas if you're a sole trader, you basically can just start straight away. So that's all that they wanted to say. Starting procedures could be lengthy, expensive, and complicated, and others are more simple. Then in terms of obtaining capital, some businesses need less startup capital than others, and the business form will also dictate the access of owners to capital. So again, in general, in terms of obtaining capital, different business forms, how would that affect them? So you can see you didn't have to write huge long paragraphs, but you did have to convey your understanding of how that would affect your decision. And then ownership and management of the business, again, depending on the involvement of your friend or how much involvement he wants in the day-to-day management of the business and the amount of control he wishes to retain. So if he's a sole trader, he's got all the control and all the day-to-day management in the business. If he forms a company and he appoints managers, again, then maybe somebody else manages the business on his behalf. Distribution of profits. So again, depending on the ownership form. So if he is a sole trader, all of the profits belong to him, and he will keep all of the profits, or all of the profits. He doesn't have to share the profits with anybody, but also he's at risk for absorbing all the losses. Whereas if he forms a company, and there might be other partners or a partnership or a company, there might be other people involved, and then he might have to share in the profits. So that you didn't have to get too complicated, just make sure that you convey that you understand the differences, and that you've kept your answer focused on how will each of the factors impact his choice of business form. And then for 2 marks, which would you recommend? So there's no correct answer to this one. As long as you gave a reason and your reason was valid, I would accept any answer. So they say 1 mark to a valid ownership form and 1 mark to a valid reason. So you could have said you recommend that he be a sole trader, and then whatever reason you came up with in your opinion, and then you can get those 2 marks. Or you could have said maybe he should go in partnership with his aunt, or maybe he should form a company, whatever it was. And then this question is the 2 different branches of accounting. So hopefully you know by now, it's either financial accounting or management accounting. So there's a mark each for naming the 2 different branches, and there's a mark each for explaining. So financial accounting, again, in your own words, these definitions come from the textbook. We want you to use your own words. Financial accounting is where we record the past transactional history of the company in our books of account. And usually it is the stakeholders outside of the organization that utilize that financial accounting information. Those are our actual financial reports. Whereas management accounting are reports that we prepare for the use of the management inside the business, and for the use of future planning of the business. So that's the most important points for you to understand. Everybody good so far? Any questions? Anybody not understand anything we've said, or so far so good? And how about the rest? And no questions? So far, these questions so far hopefully would be easy. Sometimes these theory questions are a little bit difficult to decide how you're going to formulate your answer. Okay, awesome. Thanks, everybody. Then the 2.5 was explain to your friend the difference between a journal, so a journal, and a general ledger. So in that diagram in your textbooks of the bookkeeping cycle is where you would have found the best information for this. So a journal, so remember your journal would be your cash book receipts journal, your cash book payments journal, your general journal, your petty cash journal. All of those are journals. A journal is a table used to summarize similar types of transactions all in one place. And the reason we do that is to facilitate fewer postings to the general ledger, because in those journals, like the cash book receipts, we put all the receipts in one place, we total them, and it's only the totals of the columns that then get posted from the journal into the general ledger itself. That's the whole purpose of a journal, to summarize transactions. Whereas the general ledger is the whole bookkeeping system, which is the list of our chart of accounts that tells us what our balance in each of those accounts are. And we prepare the general ledger at the end of every month. When we've completed our journals, we then at the end of the month post the journals into the general ledger. And once our general ledger is then completed and everything's been posted into each of our accounts in the general ledger, we then produce a trial balance. So your trial balance is then a summary of all of the accounts in your general ledger. So please make sure you understand that, because just understanding that bookkeeping cycle, that diagram, and what we do and what we are using in each of those steps is very important, because I always found that's one of the places that the students do get confused. They confuse journals with the general journal. They confuse general ledger with the general journal, etc. So always keep going back and revising, and write down yourself, what is a journal? What are the list of the journals that I'm going to learn how to complete? What do I need to complete my journal, my source documents? What happens to the journals at the end of the month? I post them into the general ledger. What does the general ledger look like? So keep asking yourself those questions, because that's one of the main areas that the students forget, and then they get muddled up and can't answer questions with that. So some of these questions look super simple, but there's a reason that they've put them in the assignment. It's because we really want you to know how important that is. Those sections are important. So then question 3 was just for 5 marks. And this was where you had to calculate the profit or loss that was made by the company for the month of December using the information below. So they gave us the totals at the beginning of the month, 1st of December, and then what the totals were at the end of the month. What the totals were at the end. Oh, why is it doing? Oh, I know why it's doing that. It's because I've got that other. What the totals are at the end of the month. So obviously then the difference between the total at the beginning of the month and the total at the end of the month is then the movement. Okay, the amount that I added or subtracted from my assets or my liabilities during the month. So you then had to say, and remember our accounting equation, owner's equity is equal to assets minus liabilities. So assets minus liabilities equals owner's equity at the beginning of the month. Assets minus liabilities equals owner's equity at the end of the month. And then owner's equity at the end of the month minus what it was at the beginning of the month will then give us what it is at the end of the month. So I just want to show you, yeah, there were some errors in the original memo, so they gave us an addendum. So this is what your answer should have looked like. You needed to fill in assets minus liabilities. So that's a positive figure because our assets are more than our liabilities at the beginning of the month. And at the end of the month, assets minus liabilities is also a positive figure because assets is more than liabilities. So then owner's equity went from 98,579 down to 91,756. So because owner's equity decreased from the beginning to the end of the month, that is a loss of 6,823, which is the difference of the balance in owner's equity from the beginning of the month to the end of the month. So you did have to write down loss to get that 1 mark, and then your other marks were for doing those 2 calculations correctly, and there were 2 marks for that amount. You guys happy with that one? Sorry, let me just go back to it so you can see it. You guys happy with that? Is there anything that that bothered you with that question? Did you guys manage? Okay, awesome. Cool, you guys are doing really well. Okay, so that was where the little small question. I love that. I love that, Ulrich. What's that guy's name that says that? Oh, my daughter loves him. She always watches his videos. Yes, that's him, Skulk. Okay, so here was a big question, question 4 for 40 marks. So they gave us this information about our business, and they gave us the opening balances on the 1st of March. We had debit balances, we had bank and inventory, which are both current assets, and we had credit balances in our capital account, which is an owner's equity account. Okay, so no liabilities at the beginning of the month. We had 2 current assets, and we had some money in our owner's equity. Then during March, all of these transactions took place. So required was calculate the owner's equity at the end of the month. And how are we going to do that? By showing the effect of each transaction on the accounting equation. So in your textbooks, you've got loads of questions where they give you lists of various transactions, and then you break them down under the accounting equation. So they told you what they wanted. They gave you an example. We went through that example before your assignment in the NSS as well. So let's go and have a look at what this should have looked like. So the first thing that you had to do, so just so that you understand how this is marked, you had to give the account name that was debited and the account name that was credited. So for all of these account names, there's a half a mark allocated to getting the account name correct. So in order to get that half a mark, the name and the action has to be correct to get the mark. So what do they mean by action? They mean that if you've said bank, so debit bank, and that assets are increasing by 100. So the action is that you got the account name under the correct column, but that you also indicated that that asset was going to increase. Okay, that's the action. Then for the amount, so if you have a look at over here, the amount that goes under the columns for assets, owners, equity, and liabilities, most of these are also half a mark. Some of them, all the amounts are half a mark, and there's a half a mark for indicating whether that was an increase or a decrease. In other words, did assets increase or did they decrease? So half a mark for getting the amount correct and half a mark for getting the plus or minus correct for all of those amounts. So for the amount, the mark is split between the impact, which is the plus or minus, and the amount. So just have a look at that when you get your assignment back, because you might have got the account names correct, but then you put it under the wrong column. You might have got the amount correct, but you got the plus or minus incorrect. And then you might wonder, why didn't I do so well in that question out of the 40 marks that I thought I did? So that is how we are instructed to mark the question. Okay. So you'll see when I mark. So also when I mark the method, because I'm marking online, you'll see I haven't got it here at the moment. I use a red dot. You'll see it when you get your marked paper back to indicate a half a mark. I'll tell you now, Ulrich, but it doesn't matter if you wrote it in the same block, as long as you say in the 5th of March. Oh, you mean in the absolute? No, it doesn't matter at all. You mean you wrote it in the same block there? No, absolutely not. They've just spaced it out like this. So now let's go and have a look at where everything should have been. So remember, they gave us opening balances. They said that we have got capital of 110. So this is the capital here, plus under owner's equity, and I've got bank of 75 and inventory of 35,000. So you could have put bank and inventory 75 and 35 separate, as long as they were both under the asset column for the 1st of March. In this answer, they've just added bank and inventory together. So remember, accounting equation always has to balance, which means assets has to equals owner's equity plus liabilities. Yeah, assets equals owner's equity plus liabilities. So your left-hand side of the accounting equation has to equal the right-hand side of the accounting equation. So for our opening balances, we've got 110,000 on the left-hand side of our equal sign, and we've got 110 on the right-hand side. So for each transaction, as you enter it, the left side has to equal the right side. So here we've plussed 100 on the left, we've plussed it on the right. Here we've plussed 17 on the left, we've plussed 17 on the right. Okay, so as you go down, you always have to do, in this particular one, we plussed 17 on the left, but we also minus 17 on the left, which means that after doing that, the left-hand side still equals the right-hand side. So that's your overarching check to yourself with each of these transactions. So I don't want to take too long to go through all of this, but I do want to give you enough information. So let's just have a look. The owner obtained a loan of 100,000 for his uncle, should be from his uncle, to be repaid without interest in 5 years' time. So he's got a new loan. So a loan is a liability. So liability is increased by 100. And he's got 100,000 cash in his bank account. So assets increases by 100. So we are going to debit the asset bank and we are going to credit the liability loan. Then we purchased a computer to the value of 20,000 Rand on credit. So liabilities is going to increase by 20,000 because we bought the computer on credit. We owe somebody that 20,000. Our assets are going to increase by 20,000 because we've now got a computer we didn't have before. So we are going to debit the account, office equipment or computers, and we are going to credit the account, the liability account, creditors control or accounts payable. Then we purchased trading inventory to the value of 32,000 Rand and we paid cash for the inventory. So our inventory account is going to be debited because that's going to increase because we bought more inventory, and our asset account bank is going to be credited because our bank account is going to decrease because we paid money out. So assets increased by 32,000 and assets are also decreasing by 32,000. So inventory increases by 32 and bank decreases by 32. Debit inventory, credit bank. Then we sold inventory for a sales value of 17,000 Rand. And the cost of sales was 5,000 Rand. So they told us up at the top here that we use the perpetual inventory system, which means that every time we've got a transaction that involves inventory, we do the journal entry to update our inventory account. If we were using the periodic inventory system, we do not do any transactions to our inventory general ledger account at all during the year. Just at the end of the year, we do a stock count and we then adjust the final balance. Okay, so because we're using perpetual and we have made a sale, we have to record both transactions, which is number one, the sale for 17,000 Rand, and number two, we have to record our loss in inverted commas of inventory of 5,000 Rand because we've given somebody our inventory to take home with them and that cost us 5,000 Rand. But in exchange, they are going to pay us 17,000 Rand on account. Okay, so 7th of March, there's two things that we are going to, sorry, let me just keep those headings there where you can see them. Sorry. First of all, record the sale. Because it's a credit sale, the asset debtors control is going to increase. So debit debtors control asset. Credit the sales account. Remember your dead click. When income increases, we credit the account. When an asset increases, we debit the account. So the asset debtors control increases by 17,000 and our income increases by 17,000, which has got the effect of increasing owner's equity by 17,000. Remember, owner's equity is equal to income minus expenses plus capital minus drawings. And then we've got to record the loss of the inventory. So we debit the expense account cost of sales because it's cost us 5,000 Rand in inventory in order to generate that revenue of 17,000. And we have to credit the asset account inventory because my inventory has reduced. So increase expense account by 5,000, which has got the effect of decreasing owner's equity, and decrease inventory, which will decrease my assets. And then if we take 17,000 minus 5,000, the 12,000 Rand is then the profit that we made on that sale. So in effect, our owner's equity has increased by 12,000 Rand, plus 17 minus 5,000. Okay, so by making that sale, we increased our owner's equity by 12,000. So that's why you need both of those transactions. We need to record the sale and we need to record the cost of that sale, the expense that we incurred in order to make that sale. Everybody happy with that? You guys happy with that transaction? That's why the reason I went over that in some detail is because that is one of the transactions that students do seem to battle with. Somehow they don't seem to understand that you need to do, if we're using the perpetual inventory system, there are two journal entries you need to do. You need to record the sale and you need to record the loss of inventory. Okay, so what else have we got? We paid the monthly internet fee of 700,000. We purchased stationery on credit. So those two are expenses on the 12th and the 17th. So debit the expense, internet fee, credit bank because it was a cash transaction. Assets decreasing by 700 Rand because bank is decreasing and owner's equity is decreasing by 700 Rand because I incurred an expense. Stationery, we purchased for 600 Rand. So we purchased this on credit. So liabilities is increasing by 600 Rand and owner's equity is decreasing by 600 because we incurred an expense, 600 Rand expense for stationery. So owner's equity decreased by 600 and liabilities increases by 600. So again, you can see here our accounting equation. On the left-hand side, we've got a net effect of 0. Remember, our equal sign is here. Assets equals owner's equity and liabilities. And on the right-hand side, we've also got a net effect of 0 because plus 600 minus 600 equals 0. So after recording this transaction, I've correctly adjusted my liabilities. I've correctly adjusted my expenses, but there was a net effect of 0 to my owner's equity. Then the next one, the bank paid us interest. So debit bank, because my bank is increasing by the 200 Rands worth of interest. And credit interest received, because that is an income account. And remember, income accounts credit when they increase. Assets increasing by 200 and income increasing by 200. Then the owner took a surfboard. So the owner, so remember, as soon as we've got a transaction that involves the owner and the business, we will then either use the capital account or the drawings account, because those are our two proprietary accounts. The proprietor of the business is the owner. It's got a selling price of 8,000 Rand and a cost price of 5,000 Rand. So which value are we going to record that transaction at in the books of the business? The selling price or the cost price? Yes, exactly, the cost price. Yes. Oh, awesome, you guys all got that right. Perfect. Exactly, because we've got to take that surfboard out of our inventory, and the surfboard is sitting in our inventory at cost, so we have to take it out at cost. So if we take it out at cost, that means we will charge the owner at cost price. So that's here on the 25th. So we are going to debit drawings, because remember, dead click, the accounts that increase on the debit side, drawings is one of them. And we are going to credit inventory, because inventory decreases on the credit side. Decreased assets, which is inventory, is decreasing by 5,000 Rand, and we are decreasing owner's equity by 5,000 Rand by debiting the drawings account. Then on the 29th, the debtor from the 7th of March, so this transaction, owes us 17,000 and they paid the full amount. So we have to put the 17,000 into our bank account, so debit bank, and we are going to reduce debtors control because they've paid us, so we have to take that 17,000 out of debtors control because they no longer owe us that money. So debit bank, credit debtors control, those are both asset accounts. So we are increasing one asset and decreasing a different asset by 17,000. And then on the 30th, we pay wages out of petty cash. So we debit the expense account wages and we credit the asset petty cash. Assets decreasing by 2.5 and owner's equity decreasing by 2.5 because we incurred an expense. And then on the 31st, we made a part payment for that computer. We paid 8,000 Rand. Of this 20,000 Rand that we owe them, we paid 8,000 Rand. So that's a payment off on our account. So our creditors control, in other words, the liability is going to decrease and our bank is going to decrease because we're taking money out of the bank account in order to settle the account. So debit creditors control, because remember, dead click, creditors control is a liability. They increase on the credit side, which means they'll decrease on the debit side. So debit creditors control and credit bank, because bank is decreasing. So minus 8,000 under assets, because that's my bank account decreasing by 8,000. And minus 8,000 under liabilities, because my liabilities are decreasing by 8,000 because I'm paying off part of the money that I owe. So guys, I know that's taken a long time, but I wanted to really break that down for you, transaction by transaction, so that you get some live practice in doing that. And then remember, the actual question said, what is the owner's equity at the end of the month? So you then had to do this calculation, which was take the opening owner's equity plus or minus all of the transactions that we did that affected owner's equity equals 113,400 at the end of the month. So hopefully you remembered to do opening balance plus and minus all my month's transactions equals closing balance for the month. Ulrich, the examples in the textbook that you are looking at, I'm just trying to think now, the gross profit, that will come from Learning Unit 3 probably, where they give you a gross profit, where they give you a markup, and then you've got to work out a percentage. So you will be doing that in Learning Unit 3, okay, in order to work out the cost of sales. Let me just double check the learning unit for you. Yes, in Learning Unit 3, we're going to do VAT and source documents. So in that learning unit, you'll do all of those calculations. Danisha, if you tell me which question you want, because I'm basically just going to then be repeating exactly what I've just done. In other words, I'll be doing another recording because you've now got a recording. Remember, what I've done now is recorded and it's going to be uploaded. So you'll be able to go back through this and you've got your question paper. If there's a particular transaction or something that you want, a particular question, let me know which one, and then I can always do another one if it contains other transactions that you want some practice in. But remember, this is recorded. So that's why I've taken my time and I've gone through each one of these transactions in detail as we've gone through this now this evening, so that you've got all of that recorded. But you're welcome to let me know if there's another particular question that you battled with that you want me to do, and then I will record that for you as well, no problem. So let's just take a quick, hopefully quick look at our last question. Question 5. So here they gave us a trial balance of our business, basically, the following balances. Okay, they gave us a whole list of balances, and they were very clever. They didn't tell you here in the amounts whether these were debits or whether they were credits. They just put the value because they wanted you to work out which of these were assets, which were liabilities, which were income, which were expenses, etc. So if you just did it carefully and slowly using all those references that I gave you in your textbook and that chart on page 52 and the trial balances that you've got in your textbook, hopefully you would have found all of these and you would have been able to work out total income, total expenses. So I'm just going to show you the lists of the correct amounts that went under each column, and then you can check to see whether you identified them all correctly. So remember, the first question said what's the total income and what's the total expenses. So you could have done it in a different format. Remember, the memo is just for the markers. So your list of income should have included sales, service income, dividend income, and rent income. As long as that account says rent received or rent income or interest income, then you know that that is some type of income that the business has received. And all you have to do is write down the name of the account and the amount, and then total it. Then for the expenses, sales returns, I think, is the one, and I remember last semester as well, sales returns is the one that the students got a little baffled with. So remember, if you make a sale, you sell something to somebody, and then they return it to you, you have to reverse the sale. So if a sale is income, the reversal of a sale is an expense. So just remember it that way. So sales returns is an expense. Cost of sales, our telephone and fax, credit losses or bad debts, delivery expense, packing material, which is a consumable. So remember, consumables are always expenses. Postage and stationery, insurance, repairs and maintenance, advertising, bank charges, rates, and wages and salaries. Those were all of the items you should have included under expenses. So if you included in your list something that doesn't belong here, then you can't get this method mark for the total. You only get this extra method mark for the total at the bottom if you did not include a whole bunch of incorrect accounts. Okay, so hopefully that was okay. And then the next one was they wanted total current assets. So always remember they wanted only the current assets. So remember, current assets are those assets that you are using on a day-to-day basis in your business that you will consume within 12 months. So our current bank account, we use on a daily basis. Debtors control, we're doing credit sales on a daily basis. Petty cash, we also in and out on a daily basis. Inventory, we're selling on a daily basis, and our cash float is the money in our till, which also is turning over on a daily basis. So those are our current assets, and you don't forget they wanted a total for that. Is tax an expense? You didn't see it there. Let's just go and have a look. Did they have tax in your list? I don't think it was on the actual list itself. Okay, so here is SARS. It says taxes due. So why is that not an expense? Because it is liability. That is the total amount of taxes that we owe the receiver. So it's a liability. That is also, I 100% agree with you, it's a tricky one. It's not this year's tax expense. It is the total amount of taxes that are currently owed to SARS. That's why they put in brackets taxes due, and not, if it was an expense, they would have written their current tax, and that would be an expense. Does that make sense? Hopefully. Okay. It's a good question, Ulrich. So then we wanted also assets, but in this case, the non-current ones. So these are our long-term assets, the ones that we'll be using in our business over more than just the current year. Land and buildings, motor vehicles, equipment. And then the financial asset is a fixed deposit. You had to include it there because they told you that it only matures. In other words, we're only going to get that money from the bank on the 31st of December 2025, which is more than just in the next 12 months. So that was your indicator to include it under non-current assets. So hopefully you did that as well. And then we've got liabilities, current and non-current. So your current liabilities, these are the ones that we have to pay or settle within our current financial year or the next 12 months. So creditors control, these are the accounts that I'm buying on credit on a daily basis. My credit card account has to be paid every single month, and SARS for my taxes due has to be paid in the current year. So those are your three current liabilities, and then your non-current liability was only the mortgage loan, was the only one, which is a long-term loan. A mortgage loan is the loan that we take out when we purchase a property, and that's usually paid off over 20 years or more sometimes. And then they said, what is the profit or loss? So you've got all of these little formulas in your textbook in the different places where I indicated to you. So the formula for profit or loss is equal to income minus expenses. So you had to go and take the total for income, and you had to use the total above and your expenses total above. So income and expenses, you already worked that out here, income and expenses. So you had to take this total for income and subtract this total for expenses, according to your list that you had for income and expenses. And then you had to state whether it was a profit or a loss. So in this case, our income was more than the expenses. So it's income minus expenses. We left with a positive figure. So that is a profit. And you can see there's marks given for all of those steps in the calculation. And then our owner's equity. Again, you guys know what your formula for owner's equity is. Owner's equity is equal to total assets minus total liabilities. And again, you've already worked out your assets and your liabilities totals over here. So you're going to take your current assets plus your current assets plus your non-current assets, those two added together, minus your current liabilities plus your non-current liabilities, those two added together. So total assets minus total liabilities. So, and again, you'd already worked out those amounts above, and you needed to take those totals from your lists and use those to then work out owner's equity. So these are two very important formulas, if you call them that. Profit is calculated by taking your income minus expenses, and owner's equity is calculated by taking assets minus liabilities. They had an alternative for working out owner's equity, which is just a little more complicated, which you could have used, because you guys also know that your owner's equity column in that analyze transactions under the accounting equation, the owner's equity column is capital. Let me write it down here. Your owner's equity column is capital minus drawings plus income minus expenses, and income minus expenses is profit, which we've already calculated. So you can also calculate owner's equity by taking capital minus drawings plus profit. And that is your 100 marks of your assignment. So how did you guys go? How do you think you managed? How do you think you guys did? How do you feel after seeing that? Pretty confident? Just here or there problem? Oh, did you get stuck with that? Yeah, I completely understand that one. Because, yeah, just remember in future, when you see SARS, just look to see, do they say SARS payable, or does it say SARS current? And that will tell you if it's a liability or if it's an expense. Hi, Lulu, go ahead. What's up?
So I recognize the challenge I had. I couldn't see the top of your page, but with question, I think it's question 4, is it? I swapped the account credit with the account debit. I mean, I don't know. I couldn't see the top of your page, so I could have been right, but I think I might have swapped the two.
For which transaction?
The one with the, is it the surfboard company?
Oh, the drawing where the owner took the surfboard.
No, actually, I need to open it. I need to open up the question for me to confirm. But it's the one where
I'll show you question 4. This one?
This is question 4. Yes. So you see that can you go just a little bit down? Lower.
This is all of the transactions.
Yeah, so where we start to answer, so that little box. Yeah, so you see where it says account debit and then account credit.
Yeah.
I have a feeling I swapped the two.
Oh my goodness, for all of the transactions.
I think so. I haven't opened, but I think that is what I might have done.
Oh my word. You know what? You won't be alone. That's okay. There, I've got it on the screen now with the heading. So there's account debit and there's account credit. So remember, you must all. Do you think you got it wrong? You know, when you do a question like this, and I promise you, you will not get it wrong if you remember this. When you get a question like this and you've got you've got this table at the top of the table on your page, just write it there. You're welcome to write anything down that you like. Write down dead click, because you'll need this in the exams. Yeah, it's the next time.
Yeah.
And then write
I get the feeling they're all wrong.
Oh
I'm
no!
looking at it like I have the right terms, but they're just in the wrong column. That
on
is
the wrong side.
Yeah, that's the challenge I would say.
Okay. So then this is what you've got to go and practice. You remember the dead click. I've used that in, yeah. So in other words, the dead is all accounts that increase on the debit side, expenses, assets, and drawings. And the click are all the accounts that increase on the credit side, liabilities, income, and capital. And then you'll never go wrong. All you have to then identify is the account, like bank, is it an asset? Is it an expense? What is it? And you say, okay, bank is an asset. And then you go, okay, an asset, so it belongs to the dead accounts. Assets increase on the debit side. So if bank is increasing, I must debit it. And if it's decreasing, I must credit it. So use that dead click every single transaction, and then you'll get you won't make so many mistakes. It's really hard to just try and memorize it, you know, with when you try and when do I debit it and when do I credit it. It is difficult. So you need to have some kind of a little memory jogger that you can use when you're doing questions that you can refer to with every transaction to make sure that you get them on the right side. Oh, that's a pity. Well, I'll have a look when I mark it. Hopefully you didn't get them all on the wrong side. But remember with the marking, I hope not. With the marking, you'll only lose the half mark for the account name if it's on the wrong side. But if you've got the amount correct and the plus or minus correct, you'll still get these marks over here according to the way we mark this question. So hopefully you won't lose all of the marks.
Yeah, everything else on the table looks fine except for the two.
Okay, perfect. All right, then that's fine. Then you'll still hopefully pass the question, but you would have just lost the half marks for the name of the account. Palelo says question 5 through you. I know you know what, it is a question that the students do seem to battle with, and yes, I'm glad that you say that you thought it was easy, but then when you actually do it, it's not so easy. And I also think that question 5 is a very easy question. But remember, it's only easy if you can 100% correctly identify current asset, non-current asset, expense, income, etc. So that's why that question 1 from the assignment, where you've got that table and you've got to be able to identify the name of the account and identify it under the columns correctly, you've got to constantly practice that using a trial balance or a list of questions, because if you can't identify it correctly, you're going to put it into the wrong category. But I'm sure you won't have got it all wrong. I'm sure you'll have got plenty of them right, maybe just some of them that you battled with. Okay, so Ulrich says, so SARS payable. No, you've got that the wrong way around. SARS payable, is it saying that it's payable is the same thing as, whoopsie, what's happening there? Saying that it's payable is the same thing that it's saying that it's due. So SARS payable, which is the same thing as due, that is a liability. Okay, and SARS, they usually will then say current tax or current year, that is an expense. So when you see tax on the income statement is an expense. Tax on the balance sheet is a liability. Does that make more sense? If the financial statement that you're looking at is your income statement, statement of comprehensive income, that tax is an expense because we've got profit minus tax equals net profit. Okay, but if you read in the balance sheet and under liabilities, they've got SARS payable and the tax amount, that's a liability. So yeah, it's just a matter of getting used to doing that. That's a very easy mistake to make. Okay, guys, anybody else, any other questions, anything else? So remember, just let me know in your, you can send me questions at any time. We will have another collab on the 20th of September. That will be a general collab, and I'll go over some other questions of your new learning units that you're going to be going through for your next assignment. And then anything that you want me to address, I'll do that. So Danisha, if there's any particular question that you want me to do, I can do, let me know, and I'll do that on the 20th of September. Otherwise, I'll just pick a question that I think is also like a good question to practice the work that you've got to do for your next assignment, and then we'll do that. Which question is that one, Ulrich? Which one do you want to see? Question 4. Question 5, okay. Oh, you want to see where drawings fitted in. So drawings and capital, they won't fit in because they only asked you for income and expenses. So drawings and capital is not income and it's not expenses. And then they only asked us to add up assets and liabilities, and drawings and capital is neither of those. So you should not have included drawings or capital anywhere on any of your lists. Yes, exactly, because they are the proprietary accounts. Does that make sense? Yes, okay. So that's also a very good question. I'm glad you asked that, because you can also kind of think, because the account is on the list, I must include it somewhere. So that's not always the case. If it's not the category that they've asked for, then it doesn't belong in any of your lists. So that was also a good observation. Okay, guys, I'm going to finish off here because this is going to be a super long recording. Remember, this is recorded and I will post it for you. And any other questions that you've got regarding the assignment or anything, you can let me know, especially once you've got your marked assignment back. Any questions, you can let me know. Okay, all right, so let me switch the recording off.